All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Sorry, I was up pretty darn early here this morning watching Europe and everything else, so feels like afternoon. But anyway, market's been open here for almost an hour. And ready to kick off the 100K challenge, last phase of the testing here, and get out and go there. If you haven't seen the intro video, it is linked there in the message feed this morning. I'll link it again, continually, and then also a link to the spreadsheet that you see on my screen right now is also there, so you can go and check that out. And in that spreadsheet, there is also the intro video link associated here with that. So all of that will be there. Also, what will populate on this spreadsheet are the video recordings that we do. Every morning and every afternoon. They will be populated in here, and they won't be as kind of real time or as quick to populate because this is a manual population here. But they will be all included here. So anyway, if you haven't seen those, feel free to go and check those out, and take a look at those. Now we'll get started here. In about 4 minutes? About 4 minutes until triggers are official. And then we'll go out and make some plays here with those. But want to make one comment, regarding some questions that have come in and whatnot here with this auto test here. And that is that this is an automation of the decision-making process for challenge trades. Okay, this isn't an auto trade function. This isn't, hey, throw your money in an account and it'll just auto trade it for you. That can't happen. Auto trade systems are based off of technicals, or they're based off of somebody making a decision and boom, auto trading it for hundreds of accounts. So basically, a fund manager. That's what it is, and that's what auto trade systems are. This is an automation of the decision making process for the challenge, entries, exits, and holds, and what to do with trades, at certain times. That's what this is. It's not fully automated, meaning there's some manual action that has to happen, right? I mean, we talked about it yesterday with the ATR method. I mean, this isn't set up to just automatically happen and boom, go. But no, this is the steps. These are the steps to make the decisions, right? And so it does require a human. Right, it does require human intervention, but it is, those decision-making processes. They all have a recipe. They all have a step-by-step type of way of looking at it. And we talked about those yesterday, and you can check those out in the intro video, and you'll see those in action as we go forward here. Okay. All right, now before I jump on video each day, I will populate the triggers that come in. So this morning there is one trigger out there, and it's Nike, and it's a bearish trigger that is popping in. There are some others that are close. Caterpillar on the bullish side, is very close here this morning, but it's not quite there. But Nike on the bearish side, I was kind of surprised to see a bearish trigger, but Nike is triggering it. This is the chart of Nike, and you can kind of see what it looks like. Now keep in mind this is the morning, and the chart can look different by the close, right? And so it's one of those where I can go and we can look at the chart, we can look at this and that and the other, and talk about different aspects of it. But these signals, they're automated. That the signals have no bias. They are based on the metrics. They're based on the technicals that are out there here with it, and that is the signal that is coming in here this morning. frankly, I'm surprised we got a signal this morning. In fact, most signals, in fact, testing this over the last it's been about 12 months here testing these entry signals. Most signals actually come in the afternoon. Very few actually come in the morning, but we are seeing one here on Nike this morning, so it gives us a chance to go out and start the test. All right. Now there's three baskets. Three basket that we're working with. Test 1, 14 to 20 days, exclude earnings plays. Test 2, 14 to 20 days, all plays. Test 3, 30 to 60 days with first strike in the money. Okay, and so let's come in here, and we don't have to worry about earnings with Nike. Nike earnings, they already happened a couple weeks ago, so we can come in, we can put the ticker, and I'll make this spreadsheet look a little bit better as we go forward. But we need to find the right option here for it. And if we come into Nike, we need 15 to 20 days. So that takes us out to the April 26th strike. All right? And we're looking on the put side here, and we're always going to go in the money. Okay, we're always going to go in the money, and we generally are going to want a delta that is about that is about 30% of the, about 30% of the option value. I'll talk about that a little bit more, but here for Nike, it's the 85 strike. Right? It's the 85, the 26th of April, 85 strike that we're going to play. So 25th of April, 85 puts. Okay. And that'll be the strike price. Now the entry price, right? Now we're not doing this live, so this entry price may be a little different. But real entry price right here, probably about $1.44. We could grab, there on it. So just gonna put entry $1.44. Maybe I ought to get a little bit better than that, but going to put that in. And then I don't have contracts. Let's insert one here and put contracts. And so we need to put $800 in here, right? So at $1.44, how many contracts do we have to do to get $800? What is it? 6, 5, 5 is we'll do 6 here. Okay, and so cash in will basically equal the entry times the number of contracts times 100. Right, so 864. So we're just a little bit over, and you'll see that. I mean, we'll be a little bit over, we'll be a little bit under, here from time to time. So in there, and now we need the ATR. What's the ATR on Nike? Because the ATR is what is going to drive the decision making going forward. Okay, the ATR is 1.26. All right, 1.26. So this will drive the decision making going forward here. Okay. Now, the test 2, it's going to be the exact same thing. Right. It's just going to be the exact same thing because we're just same play, no earnings included, so it'll be the same. But here on test 3, we have to go 30 to 60 days out. What does that mean? Now we have to get out a little further into May. Right? And the first strike in the money here in May. And so we're looking at the 85s. They're going for 215 to 217. Realistic fill price here would be 217. So on the ask price, so we'll get in here and go entry of 217 on 4 options. Right, will get us just over $800. Ticker symbol Nike. Average true range 126. It's the same, and then the cash in will be the same same function here. Let's just I don't have this sheet set up completely right yet, so it'll have to we'll have to manually do some of this, but we'll do the number of options times the entry times 100, and it'll be 868 cash in. So there, we're into Nike and going. Now, don't have a decision to make. I don't have a single decision to make, right? I do, however, have to log what the price of Nike is when I got in, right? And so the price of Nike when we got in, and I know these are varying by pennies here and there because the market's moving, the market's ticking, right? So we're just getting pretty close here, but 84.46, right? 84.46 is the price of the stock, right? So let's come in and we'll add that here. Insert one left, and we'll put price of stock. And again, I'll make these all look better. But 84.46, right? Is that what it said? Yep, 84.46, and that is that's going to be same all the way down the board. All right. So anyway, that's that's where it is, right? So now what does this mean? What does this mean? Well, this means our stop, or where we get out, and I need to stop using the word stop, but where we get out is if we jump on this afternoon and Nike is $1.26 below 84.46. We're out. We're out. Simple decision. We come back to this ATR method. Close a losing trade on one ATR move from entry. And I'll put a little work into here and add the exact price, have it calculate the exact pricing and everything else so that we can see that. So $1.26 lower by the close, boom, out. If that happens by tomorrow at 8:30 in the morning, my time, 10:30 Eastern, boom, out. If that happens by tomorrow afternoon, boom, out. It's only at these times, only at the 10:30 and 3 o'clock time period Eastern time that we're going to make this decision. If it dips down and dips below in the meantime, we're not going to make a change. I'm not going to sit here and stare at it all day and go, well, it's now $1.22. What do I do? And make, kind of torture yourself in making decisions throughout the day. So it's that easy. It's that simple. All right. As far as taking gains, we'll sell 40% of a profitable trade on a 2 ATR move from entry. What does that mean? Well, Nike's got to move up, $2 or move down $2.40, right? It's got to move down $2.40 for us to take it off. Now, after that happens, we'll repeat step 1 and 2. But if we go 3 days without triggering step 1 or 2, we'll exit. So let's just say, Nike decides it's going to go down to 83. We're still in. We're still holding it 3 days from now. Yeah, the trade's working, but it hasn't moved that 2 ATRs. Well, then the trade would trigger an exit, and we'd be gone. Okay, so that's how the exits are going to work, and that's how the exit on Nike here would work. But there, we have an entry. We have an entry. We have a setup, and we're into the three baskets here. So to speak. Okay, so that's Nike, and pretty easy to kind of make the decisions. Right, it's not like we have a lot of decisions to make. We have to go find the option, and we have to make sure it's the right amount of cash. And make sure that we're kind of understanding of where this ATR is and where we would need to potentially look to exit here. Okay, so that's it. It's that simple, right? It's that simple. And the automation of the challenge process is designed to be simple. To be painless, to be, to kind of make all the decisions for us, right? Where, I don't have to sit here and go, well, Nike's hourly chart looks like this, and well, what about the market at this level, and the market's doing this, and I know Nike's going down, but Caterpillar's going up. So what do I do about Cat, and what do I do about Nike? What do I do about MGM, and J&J, and the price of tea in China is X, Y, and Z, and bring in these infinite number of variables, and the automation process is designed to remove all of that, to simply just remove all of that, and let the challenge function on the high probability, types of setups that we see out there. Okay, so anyway, that's what we see out there, or that's what's kind of going on out there with this automation here this morning. Okay, now if we go and we look at Nike, right? You'll notice a couple things here with Nike. You'll notice the 3-7 is crossing on down, right? Now this isn't technically a Katy signal, right? And I mentioned this algorithm is a little cross of some signals and some some variations on some things here that I've taught in the past and have done in the past. It's not quite a Katy signal, but does have the 3-7 cross down here on it, or associated here with it. One thing you'll also notice with a lot of the trade triggers that you'll notice, they have a filter on them. One of the filters on them, and it's not a filter that comes in all the time, right? It doesn't have to have this, but you'll notice a lot of them will have it. They'll have this slow stochastics, where it's a 39-day slow stochastics, okay? And you'll see that on bullish signals, it's moving above 50. It doesn't have to happen that day or something like that, but it's generally on bullish signals above 50, and on bearish signals generally below 50. You'll see that as a very common theme with a lot of the trades that trades that trigger. I mentioned CAT had a potential of triggering bullish here today. You'll notice CAT is above 50 here. It is falling, but it is above 50. That will be a common theme, but it'll be more common to see triggers on stocks that are moving from below 50 to above 50 here with this 39.1 than it will be to see from going from 80 down to 60. You're starting to make a downward move here with it. So that'll be kind of common to see there with that. If you take a look at something like MGM here on the watch list here today, you'll notice it has a 3-7 crossing to the upside, but a 39.1 crossing to the downside, right? It has kind of that mix, right? And generally when it's mixed like this, it's not going to create a signal, and it's not going to, set up a signal. But it is something where if we were to start to see MGM break down from this snapback rally, that it could trigger on the bearish side with how the stochastics is set up, there with it. So, I show that to you just to kind of, if you're looking for an indicator that, is probably going to match what the algorithm is doing more than any other indicator. It's not going to be the 3-7. It's not going to be a MACD. It's not going to be any of that. This is going to be the one that's going to, be a little more indicative or match kind of most of what you see. But again, not always. Not always. This isn't an algorithm that is based on A, B, C, D, E, F, happen, then go. This is an algorithm that is based on, well, how has the stock done with this indicator in the past and that indicator in the past, and what are its general tendencies with those, and then what is its price action relative to its recent price action, in terms of lows and highs, and takes all those into account. Okay. So anyway, Nike here this morning. I don't think anything else was all that close here this morning. I believe Honeywell was one that kind of started to show some signs, but didn't trigger here for a bearish trade. You'll notice where the 39.1 is here on the stochastics for Honeywell, right? So to trigger a bearish trade, it has some of the elements here to a bearish trade for the algorithm, like a Nike, but it doesn't have this 39.1, and it's not that it has to have it or that this is keeping it from triggering, but generally you're not going to see stocks trigger bearish when the 39.1 is up here above 80. That's going to be pretty rare to see. generally it'll be, on the downside. And if you look at kind of the way that I look at stocks historically and the way that I trade stocks historically, I'm not looking for tops and bottoms, right? Not looking for tops and bottoms. And this algorithm is not looking for tops and bottoms. The algorithm is looking for lower highs, okay, to play short and higher lows to play long, right? That's what it's looking for. And so when we look at something like a Nike, right, which, fundamentally I'm bullish on, but we look at something like a Nike, right, that there's some lower highs coming into play here. Right, and so this isn't just kind of a top picking type of a thing. There's a lower high coming into play, and you'll see that with a lot of the bearish things. Where on the bullish side, you'll see higher lows, coming into play here with it. All right, so there we are. Number one, day one, AM out of the way. First entry with the only signal that we got this morning, and running here with that. And then I will be back here an hour before the close. We'll take a look at Nike and we'll say, hey, is Nike $1.26 from our entry price on the downside, or excuse me, on the upside? Meaning, did it rally $1.26? If the answer is no, we're still in. If it has dropped, $2.52, then we'll take some profit, take some gain, and continue to hold the rest and reset that that stop or that target for taking it off, or profit taking or taking off the position altogether. Thanks for hopping on. Have yourselves a great one. Any questions, please let me know. And we'll talk to you later. Take care.